But is there something what you also observe, maybe for the NQ or for the ES?
That's a really good question, because using the NQ as an example, and just even looking at this right now, this call resistance, there's a confluence of three things here. So how would I calculate my risk? Well, I'd say, there's the call resistance. There's a blind spot in here, right? So that everybody can see the blind spot. I'm going to close that. So this is blind spot.
Let's step into this. I think it's 25 points, something around this.
Yeah. So there you go. There's the blind spot. And for me, I would be calculating based on my trade yield risk. So if it's, $400 and I'm using micros for an example, then that's 20 points that I have to play with, I think, mathematically. So I would place a stop somewhere above here. This is on a reversal, right? And I want to see a reversal happen, and I'll have a sell right away, because my observation is you get a quick reversal on the first touch, and then I'm out of the trade. So I'd have a stop probably, somewhere around here, because if it breaks through here, it's probably going to GEX9, and you know how when the call resistance is broken, I mean, you have beautiful trades to the next levels.
But this is exactly what I was also observed. So you were saying, so I think you was figuring out 20 points, 27 points around the numbers.
Yeah,
I was observing many times that people who day trading the Nasdaq, they're giving maybe only 20 ticks. But this would be not working. So this was my observing. Most of the time, if you want to trade the levels, so if you want like the call resistance or put support, but you say to yourself, okay, I'm risking only 20 ticks. So sometimes it works if you get it really quick, but most of the time you have to calculate in this the pin risk. So what I mean, so the 20 points or something like this. So if you not do this, it could be, you can stop out, and this would be not the best way.
Well, there's something also that I calculate called fractal rotations. So it's over a 20-day average. What is the fractal rotation, or what is the average? It's basically the average rotation of a particular product, before it, as it's wiggling. It's the wiggle size, because products, if it was going from low to high, it doesn't go in a straight line. It wiggles, and it might go up 40 points and pull back 30, and then go up 20 points and pull back 20, and in the ES it's about 4 points, like 4.3 points, and in the NQ it's around 22 or 23 points. So that makes sense. In other words, if you just had a 20-point rotation up, that's not the place to enter the trade. Because you're likely to get a 20-point pullback before you go to your ultimate target. So you got to keep that in mind when you're entering a trade.
Yeah, and also if you want to be shorting the call resistance, for example, so what I was observing is place your trade not directly on the call resistance, place this 20 points below. So you will see first that we touching this level, and then wait 20 points until we came down back, and then take the market order and go in. Before, most of the time, it makes no sense. Because you have the 40 points risk, so 20 points to the upside and 20 points to the downside. So in the end, it's 40 points. If you can handle this with your account, okay, it works. But you can be also getting crazy losses. So this is something what I was observing, and it's cool that you can confirm this also.